If you're watching this, you probably have a passion for trading financial markets, and most likely you hope to turn one day this passion into a full-time profession. You probably enjoy learning about the markets, trading, investing, or finance, but you might have a major problem preventing you from moving on to the next level, and that problem is time. Having a full-time job or going to studies or having a busy schedule doesn't mean that trading should be out of your reach. You don't have to be in front of the charts all day to trade profitably. In fact, not being in front of the screen all day might be a huge advantage. So today we'll discuss about the simple steps you should take in order to trade successfully, even if you have a 9-to-5 job, go to school, or simply want to allocate more time to your friends, family, or other hobbies. Before we continue, if you are new here, make sure you subscribe, turn on the notifications, and leave us a like to show your support. The process of developing and refining a trading program based on your other daily schedule is an ongoing process. This is not something you do on time. It is a continuous process that begins with ideas, progressing to transforming those ideas to actionable trading systems, and then monitoring the results. If you want to maximize your chances and actually make some money trading part-time while having other activities, you need to incorporate 7 steps into your daily routine. Number 1. You need to adapt yourself to swing trading. I have some potential bad news for you. If you like day trading but you don't have time, it's very hard to make consistent profits on a daily or weekly basis. Swing trading, on the other hand, is very popular among traders for 2 main reasons. First of all, trading strategies of this type usually include entry and exit techniques that involve monitoring the charts, perhaps even once or usually twice a day. This relatively relaxed program is very suitable for those with an active life and full-time jobs, because swing trading is a style that involves holding a position in a traded instrument for a short period of time, typically between a few days to a few weeks. So forget about day trading and focus on swing trading. Number 2. The 4-hour, daily, or weekly time frames. Since you have a day job or other activities, you will have a very limited number of hours to study and trade. Therefore, you should limit yourself to trading in a 4-hour, daily, or weekly time frame. If I had to suggest one time frame for people with 9-to-5 jobs, it would be the daily time frame. This allows you to check your charts for a few minutes once or twice per day. The trading reality is that the lower the time frame, the less accurate any trade setup becomes. When you trade the higher time frames, you get a better picture of what is really happening in the market, because most of the market noise on the lower time frames is eliminated. And this is a good thing for you, because there are so many opportunities on the 4-hour and daily charts, and concentrating your mental energy on lower time frames could become quite inefficient. So swing trading and higher time frames. Number 3. Find time to research and analyze. Now that you know your style and your time frames, you need to make your analysis. Swing trading may require less time than day trading, but you still need to do your homework. No strategy will succeed if you just blindly trade on the daily chart. Now, depending on your schedule, you can make your analysis whenever you have free time, before work or school, after work, or during the weekends. Many traders find that the weekends are the perfect times to build out a trading plan, and then all they have to do as the working week begins is to follow that plan, so that they have the minimum amount of daily work to do. So take the time to research and analyze carefully, because the more information you have, the better you will be able to plan your strategy for the coming days. When researching and analyzing, focus on recognizing relevant support and resistance levels on higher time frames, understand momentum and volatility, identify if you are trading a range, a channel, or a strong trend, and recognize chart patterns in both trending and range-bound markets or any other analysis you feel comfortable with. The 4th step: set buy and sell prices ahead of time. Once you have made your analysis, choose the instruments you want to trade, stocks, currencies, or CFDs, and identify the prices where you will buy and sell. Your goal is to simply buy and sell at the best prices. So use your research to identify the acceptable prices beforehand. Not only this will allow you to execute quickly during trading hours, when you have some time between meetings or other tasks at work, but it will also help you to avoid making bad trades based on emotions. So when you leave the house, no matter if you made your research late the other night or in the morning, you already know your buy or sell prices. Number 5. Use ranges instead of exact prices. As a swing trader, you won't be able to monitor price movements every minute of the day. This is why you should use price ranges rather than exact prices. This will give you some flexibility, but be careful not to take it too far. You still need to be strict with yourself when executing your plan. Sometimes you might get impatient when the price gets close to your defined range, but don't be carried away by your emotions. Swing trading requires patience and discipline, two psychological issues most traders fail to deal with during their trading program. Number 6, and probably the hardest step for most traders, stay consistent and disciplined when executing your trading plan. Because you already planned your trades ahead of time, you won't need a lot of time to execute them. Set aside even just 15 minutes of your lunch break to check on your charts. If you see that the prices have reached the buy or sell range that you set during planning phase, then simply execute the trade. Or, if you are very busy, use limit orders and let the market come to your best prices. But if you don't like limit orders and use classic market orders, and if the prices have not reached the defined range when you are planning your strategy, hold your position and check the market again tomorrow. Of course, if the day passed without any trades, it's better to readjust your analysis. The most part of it is already made. You just have to readjust some levels and search for other clues that might interfere with your initial plan. Number 7. Let technology help you monitor your trades. Nowadays, you can access everything with just your phone and a Wi-Fi. There are many free services and apps that can help you monitor the markets on the go. If you have a very demanding schedule, you can also use some services so you can get messages and emails whenever a stock or a currency hits your defined buy and sell prices. This way, you can react instantly to market events by receiving alerts for desktop or mobile. If you're relying on technical indicators, you can use a screener for technical indicator notifications. You can find some free screeners that allow you to create notifications using popular indicators like moving averages, RSI, or other common indicators. If your strategy is more complex, there are other useful screeners that will allow you to create simple or complex conditions by combining different indicators. So take advantage of technology. It can save you a lot of time if you have a busy daily routine. Now, trading, like business, sports, or art, requires a consistent effort over a period of time, and going into trading can be a real challenge if you don't have a clear plan and system for trading. Like any other activity, if you start with realistic goals, good education, and quality practice, you will eventually gain an advantage over others and get ahead of the game. Learning how to swing trade successfully may seem like a full-time job at the beginning, but once you've mastered your strategy and your technique, your trading program will require only part-time hours. If you are casual and unstructured about your trading, you will experience losses, while those who take trading seriously and work on refining their technique will most likely succeed. Now, if you found value and learned something new, make sure you subscribe to our channel, turn on the notifications so you don't miss future uploads, and leave us a like to show your support. Until next time.